This is a quick little mini course for business owners about how to review your business tax return. Okay, so you got your business tax return from your accountant, and there's a lot of pages in the PDF. Now what? You're supposed to review this, right? You don't just sign it. No. You don't just want to sign your tax return. You want to review it. Your accountant is human, and while we hope that they don't make mistakes, it's really important you review your business tax return. So let's walk through the different forms that you may have received and how to review them so that you know your tax return is accurate. Well, if you're a pass-through entity, then you will have received either a Form 1120S or a Form 1065. That's if your business has to file its own tax return. If you're a partnership, you'll get a 1065. If you're an S Corp, you'll get the 1120S. Now, if you are a C Corporation, then you will instead receive Form 1120. So the first thing you do is you open up the PDF from your accountant and you want to make sure that you've got the right tax return. Okay, now that we got that out of the way, let's take a look at a typical tax return. In fact, if you look at all three of the tax returns that we just mentioned, they all look pretty similar. In fact, all tax returns for businesses are going to have the same 3 or 4 basic sections, okay? The top section is going to be the information about the business, including the address, the name of the business, EIN, things like that. The next section is going to be the revenue and the sales of the business. Next is going to be the deductions. Well, deductions are just the IRS's word for expenses. You probably know them as expenses. And then the bottom section is going to have other miscellaneous information about the business. And then there's the signature block. Now, there's really only one page to review. You could review the additional schedules that are attached to your tax return, like Schedule L and Schedule M. And those are going to contain things like your balance sheet, reconciliation if you're using an accrual accounting method instead of cash, and a few other checkbox areas to make sure that the IRS understands what you're giving them. So let's kind of walk through the typical review that you need to do for a tax return. Now, the easiest section to review is the top section, and that's your business information. If you're using the same accountant as last year, this information is probably correct because your accountant just loaded it from their software from last year. However, you want to look at the address, the EIN number, and all the other information to make sure it generally looks correct. This is the number one place where accountants will make a mistake, or there'll be a typo or a number left off or something like that. Now that we've reviewed the business information at the top of the tax form, let's do a quick cursory review to see if your tax return warrants further detailed review. So go get your P&L from last year, your profit and loss, and print it out and look at the bottom at your net income. That's the amount of profit your business earned. Now go over to your tax return and look at the bottom of the section that has your ordinary business income. If your ordinary business income on your tax return approximately matches what your profit and loss says within maybe 1 or 2%, then you're done. Then all the other deductions and sales and revenue and everything else on your tax return is probably right. If this is the case, then high fives all around, get that tax return filed, and you're done. Now, if the ordinary business income on your tax return isn't close enough to your profit and loss, you want to double click on things. So let's do that now. We're going to start at the top section, which is your income. The IRS says income that we in business would typically say sales or revenue. This is going to be the top part of your profit and loss. And so the number that you report on your profit and loss should be close to what you see for the total income for your business. And it may not match exactly because there may be some things that you consider sales that the IRS does not consider sales, but it should be pretty close. Next, we just go line by line in the tax return and try to figure out how to translate from the IRS's version of income to your profit and loss. And usually this is pretty easy. Once you finish the income section of your tax return, jump down to deductions. Deductions are just the IRS's name for expenses. And so just translate from the IRS deductions to your P&L. You may have to do a little bit of matching up. So for example, the IRS form may have the word wages, and maybe you use the word employee wages in your P&L. The IRS may use the word advertising, and maybe that matches exactly the word that you use in your profit and loss. So just work down through the deductions and translate as best as you can over to your P&L, and then go back through your profit and loss and make sure that all the items on your profit and loss are reflected on your tax return. Okay, make sure you do that both ways. You review all the things on your tax return, make sure they match your profit and loss, and then review all the things on your profit and loss to make sure they're all on your tax return and there was nothing left off. At the end, what you're going to do is probably have some questions if your ordinary business income doesn't match your net income. Just send those over to your accountant. Now, there's probably going to be some things on your tax return that don't exactly match what's on your P&L. And so let's understand a little bit about why that is. Well, first of all, there are some things that you consider to be a cash expense to your business, but the IRS doesn't let you deduct that fully on your tax return. An example of this is meals. When you go out for a meal, then you're going to pay the full amount on of the bill. But on the IRS tax return, only 50% of what you paid is tax deductible on your tax return. Same thing with entertainment. And so those are just a couple examples where your categories may not exactly match up. There are some other things that will not appear on your tax return for your business. They'll appear on your personal tax return, okay? And those are going to be things related to capital gains. Capital gains are the tax on transaction when you sell assets. So that could be equipment, maybe you sold a building, maybe you sold a vehicle. Anything like that you sold is not going to be reported specifically on your 1120S or your 1065 tax return. Those are going to be reported on Schedule D of your personal tax return. The way that that gets communicated to your personal tax return is through your K-1. So that's another example of something that you might see on your P&L, but you won't see it specifically on your tax return. So that's it. That's all you have to do to review your business tax return to make sure it's accurate. If you have any questions, make sure to follow up with your accountant so you can file on time. If you like this training and would like more similar training, please join us online over at the website firmstride.us. You can also follow us through Facebook, Twitter, and through our YouTube channel as well.